Hello everyone, this is today's video analysis for June 18, 2019. Today we're looking at the EURUSD, the euro versus the US dollar for today's trade analysis. As we start here on the daily time frame, the current trend and current momentum for this currency pair is bearish. If you look over here on the right hand side of the chart, the black trend line shows us the market has been moving lower for the past week or week and a half or so. Starting all the way up here at the purple shaded area, top of the black trend line, 1.132535, found resistance 4 days in a row, eventually turning lower, getting under the green zone, and beginning to fall all the way now down into the 111.90 level, just underneath 112. Pink shaded area, 112.05, 112.20. So if we're going to trade the direction the market is currently going in, the sentiment, the trend, the momentum, we would be wanting to trade short. We'd want to be selling this currency pair. So the best place to sell for lower risk and higher reward is always going to be closer to resistance, not at the lowest low. Selling now, you're limiting your potential profit. So you want it to actually rally back higher. Let's zoom in. Actually, before I zoom in, I want to point out a couple of other times where we did what we're doing today. We challenged it over here on the left hand side where the black circle is, didn't break it, and turned back around and went back higher again. There's another time right here where the market got underneath, didn't break it, and turned back around and went back up again. So we need to be careful that we're not falling prey to a false breakout. So there's a few things we'll look for over here on the right to help make sure we reduce the chances of falling prey to this kind of false breakout. We want the real breakout. We want a higher confidence that it's going to continue to go lower here for the year rather than just suddenly turning back around and going back in the other direction. So if we're going to sell, again, the best place to do that is closer to the pink zone. At least that decreases the risk. So that way, if it does become a false breakout, turns around and goes back in the other direction above 1220, then we limit the impact to our trading account. Now that we've seen that history, let's zoom in a little bit here. And again, we can see the market underneath there. By the end of today, we don't really know what this candle will look like. It could look like a very large bullish candle by the end of the day. So really the best thing to do here on the daily is wait for the open and close under that pink zone, another daily candle, at least today, to close underneath there to increase our confidence that it's going to stay underneath there rather than just suddenly turning around. Big blue candle today back above the pink shaded area, similar to what might have happened back here on where the black circle is, left hand side of the chart. So we want to be sure it's going to stay underneath there. Again, our risk is pretty simple. We just don't want it to get back above this pink shaded area. So stop losses, if you decide to go short, are just above there. That way you limit the impact, and of course your potential profit is going to be measured at least down to the blue zone, because history shows some support into that blue zone. If it can get through that, then we might look for it to go down to the green zone at the bottom of the chart. Buying, there's really no reason to buy it right now. The market's going down, the sentiment's down, the dollar's been rallying, so there's no real reason to go long here on the euro dollar today. So mostly we're focused on the short side here for this currency pair. 4 hour time frame, we could see right now the market is clearly underneath it currently on the 4 hour time frame. So again, that becomes our resistance. Our expectation is that it will stay underneath there and not turn around and go back up again. Our targets on the downside would be the blue zone if it does continue to go lower, and then beyond there, the green zone down here, 111.30, 111.10 is the green zone. So if we're going to trade this short in the direction of the trend, we want to get as close as possible, 112.05. That's, not too far. That's 10 pips higher than current market value. Get as close as possible to that pink zone. Short into the blue zone, green zone on the way down. The risk today is that it turns back above the pink zone. Keep an eye on that and use appropriate risk strategies in all trade scenarios.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.